Gerrit Viljoen from Ultima Financial Planners. Quite often we find clients coming to us already having tax-free savings accounts which they got at the bank when they go and do some other transaction. And normally these tax-free savings accounts are not properly structured, where it's given to them that they can save on interest, on tax that they're going to pay on interest. Now that's not the most appropriate making use of a tax-free savings account. Today I'm going to look at the differences, and I'm using M&G's website. You can go there as well, and where you can emulate tax-free savings account and a normal unit trust and see what the difference is. So what we are looking at is using a fund, and they've only got the enhanced income fund, which you can utilize as the underlying investment. We've looked at the tax bracket. It's the second highest one. We're looking at somebody wanting to invest for 35 years, and they're investing 3,000 Rand a month or 36,000 a year, which is the maximum you can invest currently annually in a tax-free savings account. Always remember that the maximum you can invest totally is 500,000. You can then leave the investment there, and we have questions about this as well. You can leave the investment there, and then it can grow whatever the underlying fund is. So when we use the M&G enhanced income fund, it's a fixed interest fund, and here on the graph on the left hand side you can see that the tax you will pay on the interest if you just invest in a unit trust, a taxable investment. On the right hand side you can see that if it's a tax-free savings account with interest in it, you would have received 3.451 million, and there's no tax payable because there's no interest. There's also no capital gains tax, but normally a ordinary interest bearing unit trust or account does not have capital gains tax. And you can see your maximum is 3.45 in the tax-free savings account. If we then make use of a fund, and I'm just choosing the dividend maximizer fund, you can see that our gross return will be 11.4, and yes, even though it's a equity fund, there's still some interest and dividends taxed in the fund. If it's a normal unit trust, you'll pay 2.7 million tax, and you'll have a residual of 8.55 million Rand. If it's done in a tax-free savings account, you will get the full 11.261 million return after 35 years. Now you can see the difference between the 11 million that you will get after 35 years against the 3.451 million if you invest in an interest-bearing account. Now I hope this will show you the vast difference between making the right underlying fund choice, and this is what we try to help clients with, making the right decision which fund to use for your tax-free savings account. Now remember, in retirement you can withdraw tax-free income from either the 3.4 million, or if you've invested that in an equity fund, 11.261 million. It's a vast difference in terms of the income that you will receive. So I hope this has helped you, and until next time, all the best.